Money Show is delighted to welcome back Oliver Velez, who is an international best-selling author, world-renowned trader, and entrepreneur, and is also one of the world's most respected and celebrated traders of all time. Oliver, thanks so much for joining us. The floor is yours.
Thank you so much for having me. Thank you so much for having me once again. Thanks to the International Money Show. I don't know if many of you realize, but I have been working with the International Money Show for well over 2 decades. I believe the first show that I actually did, the first speech I delivered as the keynote speaker was in 1999, maybe. I could be wrong with maybe 2000, but anyway, many, many moons ago. And I'm always honored to be here and to speak on their behalf and to speak on your behalf as well. Today, traders, I want to talk about how I, not too long ago, had an epiphany on Bitcoin. And I want to talk specifically about how Bitcoin relates to the demonetization of gold, which I believe is not only on its way, not only is Bitcoin in the process of demonetizing gold, but it will do so in a relatively rapid rate if my view on things is correct. And I want to talk about also very briefly why I believe that it will bring back price discovery for virtually every other asset class that's in existence today. And what I mean by bringing back price discovery is bringing back things to a normal, more reliable price structure. Because it is my belief and it is my view that assets have been inflated. Most assets that exist throughout the world have been artificially inflated out of the stratosphere. And if we understand anything about cycles, it is this, that things that go out of the stratosphere do at some point get adjusted back down to reality. And usually there's some cataclysmic event or the birth of something that actually serves as the catalyst to bring prices back to way closer to where they should be, not artificially inflated out of the atmosphere. I'm here to tell you today, traders, that I had an epiphany a little more than a year ago that Bitcoin was that thing. Bitcoin was that thing that has come on the scene to demonetize not only specifically gold, but to help bring back price discovery in virtually every single market. And I hope by the end of my brief talk today, I will at least give you a slight insight into why I came to this conclusion. And I'm not the only one, by the way, but why I specifically came to this conclusion. And I hope to convince you that this is a direction or an area that you definitely want to be involved in. Now, I will be the first to admit to you that I was a Bitcoin skeptic for a number of years, but until this epiphany, and I want to talk to you about that epiphany. Now, guys, for the sake or the benefit of trying to get as much material in during this time as possible, I'm going to skip introductory stuff like who I am or what have you. I think probably the vast majority of you will know that. You can come, Barbara. Barbara's bringing me some tea. This is my Barbara here. Thank you very much. She takes very good care of me here in Colombia, my cook, my everything. Okay, great. Thank you, Barbara. So I want to skip the introductory talk. The vast majority of people, I believe, understand my history of 34 years in the business. I'm a pioneer in the active trading space. But today, I want to jump right into the material and talk about the epiphany that I had regarding Bitcoin. And if there's one slide that can sum up my epiphany, it's this one, that gold is analog money. What a lot of people don't understand, traders, is that money is the oldest technology known to man. Yes, money is a technology. It was created many, many moons ago, thousands upon thousands of years ago, I believe, by the Chinese, the first concept of money. But I want you to understand that it is not outside the realm of technology. It's actually, in fact, the oldest technology we have. But I'm here to convince you that every technology ultimately becomes replaced by a different form. And we are currently in the midst of everything physical becoming digitized. We are living in we are living in a new digital era where everything analog, everything physical is being replaced by its digital counterpart. And if we take an example like I have on the slide here, there was an analog phone. Remember those phones with the cord on them? And a lot of times the cord would get all wrapped up around your arm, and it was a nuisance to untangle the cord. And remember those phones, not the modern analog phone that I have on this slide. Remember the ones where you had to dial the number with the circular rotary numbers? And God help you if you had a number with the big numbers like 0 and 9 and 8, because it took forever for those numbers to you remember. Well, today, if you look up that analog phone on Amazon, you can buy one for about $37. In fact, I have the price here. I just checked, $37.76. Now, this is a relatively old slide, but you can check this price. Analog phones today sell for $37. What's the digital version of that phone? The iPhone, or any smartphone for that matter. Now, if we take this example of how an analog item became digitized in the new era, I want you to see the difference in price. I purchased my iPhone, my recent iPhone for $1,400. Now look at the price difference. The digital version is tremendously higher than the analog version. And in addition to that, there are more people today with a digitized phone. There are more people throughout the world with a digital phone today than analog phones. So not only is the price higher, the use case is much greater. Now, if we take another example, traders, like let's take the digitization of mail. Now, remember when you had to send a letter out, you wrote the name of the person on the envelope, the address, you made sure it was clear enough so that the mailman could read it. You licked those disgusting stamps and you put the proper amount of stamps in. You walked it to your mailbox and you mailed your letter. And maybe if you were mailing someone overseas, it would take a week and a half before they received it. And then you would not know they received it until they sent you back another mail that maybe took another week and a half or so. So this was the analog version of sending communications via mail. What is the digital version of sending mail today? The internet, Gmail, or any other mail service you have. Now, today, there are still people that mail letters. We still mail letters. But which is bigger? Sending an email. What's faster? What's leaner? What's sleeker? What's more prolific today? Sending letters with stamps on them, or sending electronic communications through Gmail or Hotmail or Yahoo Mail? The internet. One last example comes to me, and there are thousands. We are in the era where everything analog is becoming digitized. We are in the dematerialization phase of the human experience. And you had better get used to the idea that what you were able to see, touch, and feel is disappearing, and you will have to become adapted and accustomed to the digitized version of it, where you don't necessarily, you can't necessarily touch it, feel it, or even see it. We are in this digitized era, and this digitized era is dematerializing things. Blockbuster video. Now, I know all of my Americans are going to understand when I say what Blockbuster video is. Remember those? I used to rush home from my office on a Friday afternoon to make sure I got to the Blockbuster store as quickly as I possibly could after work, because I wanted to get the Blockbuster video of that week before the videos were taken off the shelf by others who got to the store before me. Remember those? And you could buy the popcorn, you could buy the soda there, you could buy all the snacks, and you had the bad movies and the good movies, and they charged you an arm and a leg to hold the video for 3 days. Remember those? And you got charged late charges if you brought the video back to the Blockbuster store late. Remember those? The ones you could touch and feel and take home with you. Blockbuster video, analog. Netflix, the digital version. You can't touch a movie if you wanted to today. You can't feel a movie if you wanted to today. You see a representation of that movie on your screen, but when you go to touch it, you're touching your screen. You're not touching the movie itself. There's no movie. It's been digitized. Netflix is the digital version of Blockbuster. Now, my question to you, is Netflix today more valuable as the digital version than Blockbuster? Of course, Blockbuster's bankrupt. Of course it is. Are there more people that use Netflix today than ever used Blockbuster in the past? Of course, this is what always happens with the digital counterpart of an analog item. It not only becomes bigger, its price not only dwarfs the price of the analog version, its use case explodes exponentially. I'm here to try to convince you today that gold is the analog version of money. That gold is the analog version of a store of value. Gold is not a currency. Well, I'm not saying that. Gold is an asset. Gold is a store of value. And historically, we use gold as jewelry. Why? Because it showed our status historically. We were wearing our wealth. If you wanted people thousands of years ago to know your status in society, you wore jewelry made out of gold because gold represented your value. Gold represented your store of wealth, and you wore your wealth. The same way today, some people try to wear their wealth with name brand items, but this is historical. You wore your value. You wore your value around your neck. You wore your value around your wrists. This created an instantaneous recognition of where you stand in life, because there were millions of people who could not wear a piece of jewelry because they were not in a position to store their wealth. So gold is not currency. It was for 4,000 plus years the number one store of your wealth, of your value, until Bitcoin came on the scene. Bitcoin traders is the digital version of gold. It has virtually every single characteristic that gold has, but those characteristics are on steroids. It's better in every single case. You can no longer say because you can't touch it or feel it or see it, it holds less value. That would be like saying that the movie from Blockbuster would hold more value because you can hold it, touch it, and see it. We can no longer ignore the fact that for the very first time, the most ancient technology is suffering from the new digitized version of gold. The digitized version of gold is Bitcoin. Now, we've already talked about the fact that the digital version Never in the history of the world has the digital version underperformed the analog version. Never in the history of in the world has the digital replacement remained smaller than the analog version it has replaced. So analog phone, $37. Digital phone, $1,400. Okay, gold, $10 trillion asset today. Bitcoin, 900 billion. Do you see where I'm getting at, traders? This is still a baby, and it's still mispriced. The digital version doesn't come up to match its analog counterpart. It exponentially exceeds its analog counterpart. The iPhone doesn't come up to $37. It doesn't come up to match its analog version. It greatly supersedes it in terms of price and use. If we take this analogy and apply it to Bitcoin, if you accept the assumption that Bitcoin is the new digital form of gold, it is a vault. It is where you store your value today. And the jewelry that you wear figuratively from Bitcoin is your key. And this is the digital form of your jewelry, the key that unlocks your Bitcoin. And if we take this analogy, the next step, if in every case the digital version has not only come up to par, but it has greatly superseded the analog version in price and in use, the price of Bitcoin today is grossly mispriced. It should not just be a $10 trillion asset. It should be exponentially bigger. And I'm here to tell you that this was the epiphany that drove me to Bitcoin, that Bitcoin was going to demonetize almost all of the other assets, because when you have a stock market that has been going up for the last several decades, when money starts coming out, where is it going to go? A savings account? Seriously? No, it's going to go to Bitcoin. When a 300-year bond market pops, and we're very close, 300-year bull market, when money starts coming out of that, where is it going to go? A bank account? A money market fund? No, it's going to go to Bitcoin. When people start cashing out overinflated real estate, where's the money going to go? Now, granted, still some will go to gold. My argument is that that is going to decrease, and the percentage that's going to go to Bitcoin is going to increase. And so we have today a $400 trillion asset world. And Bitcoin has less than 0.00 or whatever percent of that asset world. But from that $400 trillion pool, increasingly, week by week, month by month, year by year, a greater portion from that $400 trillion pool will go to that asset. Why? Because it is the best performing asset of the last 10 years. It is the best of all time. No asset has outperformed Bitcoin in a 10-year period. No asset has outperformed Bitcoin in a 1-year period. No asset has outperformed Bitcoin in a 3-month period. No asset has outperformed Bitcoin in a weekly period. No asset has outperformed Bitcoin in a single day period. I'm not talking about an individual stock, like a penny stock, whatever. I'm talking about an asset class. It's the fastest horse in the race, and the world's assets seek out the fastest horse all the time. We've gone beyond a 12-year period. We've gone beyond the point at which something is a fad. We've gone beyond the point at which it can be squashed or killed or decimated. Never in the history of the world has an asset reached $100 billion in value. We have an asset that's $900 billion now. Never has an asset reached $100 billion in value and lasted 10 years. Never has an asset failed with those two criteria. Reaching $100 billion in value, 10-year history. We're in our 12th year and $900 billion. This will continue to be the most outstanding performer of every single asset class. And it is my view that this will be the case for not just the next year, not just the next 2 years, not just the next decade, but the next several decades. And when people ask me, say, Oliver, how can you predict that? Well, I says, well, wait a minute. Hasn't Apple been going up for 40 years, 50 years? What about Microsoft? Hasn't Microsoft been going up for 50 years? Hasn't Amazon been going up for 30 years, 25 years? Hasn't the stock market been going up for how many decades? Wait a minute. Hasn't gold been going up for 4,000 years? Hasn't silver been rising in price for 4,000 years? And we're on our 12th year for Bitcoin. And that's what people are saying is a bubble. 12 years. That's what people saying it's over. These are arguments from people who do not understand financial history. A larger and larger number of people are going to move their money out of the gold market and go for its new digital format. As the world moves more and more toward a digital world, traders, people are going to become more used to not being able to see my dollars. You don't actually think your money in the bank is really there, do you? I mean, in a sense, we've really been living in a digital world for quite a long time, ever since the 1950s when the first credit card came into existence. It's just that we're going deeper and deeper down that digital rabbit hole, if you will. Imagine the day when money just digitally, the dollar's digitized because the US government is working on its digital format right now. And when the dollar is completely digitized, they're already taking coins away from us. There will be a point where there will be no more bills, traders, and everything's going to be digitized, and your paycheck or whatever fiat that you've earned by putting your effort out into the world is going to be zapped to your phone. And it's going to instantly appear. And every single time you run a red light, you're going to see digits leave your phone. Oh my God, what happened? Oh, I just ran a red light. They automatically deduct my digits from my phone. We're moving to that world, and we're moving very quickly where you will be subject to money zapping to your phone and someone zapping your money away from your phone without you being able to do a thing. This is what the political structures throughout the world want. This is what the governments throughout the world, the countries throughout the world want. China's already got its digital yuan that it's experimenting with. America's already in the throes of building its own digital dollar. And soon everyone will be used to a complete monetary system that's digitized. But don't you ever, for a single second, confuse any government's digital version of currency with Bitcoin. The difference is that all fiat currencies will ultimately go to zero. All fiat currencies trends are to zero because there's constant printing. There's no limited supply. And that fact alone causes 100% of the time every fiat currency to go to zero. You don't see any Roman coins floating around, do you? And that includes the dollar. That includes the paper fiat yen, or even its digital form. Just because you turn a fiat currency into a digital version of itself does not change the mechanics that makes it worthless over time. We're talking about Bitcoin with a limited finite supply and a huge $400 trillion demand over time, which is going to drive the price of this digital asset up decade after decade after decade after decade. And the most important thing is that it's not centralized. It's outside of the hands of control. It's outside of the hands of government and political manipulation. And for the very first time, we are there before the $400 trillion gets there. And trust me when I tell you, there are thousands upon thousands of publicly traded companies already in the midst of doing the paperwork to get approval to actually put a portion of their treasury reserves into this baby asset. And I use that word baby seriously because we are in the 12th year of a multi-decade movement. This is like Apple at 1992. Apple went public in 1980. Imagine thinking that Apple was a bubble in 1992. Imagine thinking that when Amazon crashed from $85 to $5 in the early 2000s, that it was a bubble when it moved from $5 to $12. Guys, this is way bigger than an Apple. This is way bigger than an Amazon. In fact, Apple, Amazon, and everyone else is going to plug a portion of their value into this brand new digital asset. It's the fastest, the fastest performing asset, the best performing asset, the most secure performing asset. Every single thing in the world, traders, has been hacked. Every single country has been hacked. Every single political or governmental agency has been hacked. Every single company in the world has been hacked. Every single computer in the world has virtually been hacked. The only thing in the world that has not been hacked is Bitcoin. So I place it with one of the safest assets in the world as well. And whether you accept this message or not, there is going to become a day where you're going to have to accept it. But you're going to be sorry, in my opinion, that you didn't do it sooner, because this is a baby asset that is not going to wait for you. And we're moving to this digital world where everything is ultimately going to be priced not in dollars, not by gold. It's going to be priced through the metric of Bitcoin. So everything is going to basically move, in my opinion, to a Bitcoin standard where the world is split up into two types of people: those with Bitcoin and those with only Satoshis or no Bitcoin at all. And you do not want to be left out of this. So guys, my view with my wealth traders, here is, I want to skip this. Here is the mix that I recommend for my conservative wealth traders. All right. I have a team of 600 plus traders that focus predominantly on looking for and finding the very best wealth opportunities in the world. And the mix, the conservative mix, is 30% of your portfolio in Bitcoin, 15% or less in cash, because cash is trash. You earn nothing. You lose with cash. 20% in stocks. That's right, 20%. It's at a point in the past, I had this overweighted to 80%. It's all the way down to 20% now. 10% in inflation-resistant bonds and maybe some converts or convertibles. All right, we can talk about that in the wealth group as well. 10% in gold. If you just can't seem to get away from the analog, the concept of the analog version, then leave a little 10% in there, and 15% in silver if you can't get away from these analog versions, because silver is always a better performer than gold when it comes to the two metals. So if they're going to rock in the future, silver will be a faster horse than gold almost every single time. But you'll have to dump silver before you dump gold, because it is far more volatile than its counterpart of gold. But I say for the most aggressive, that you take that 15% allocation for silver and the 10% in gold, and you throw all of that into Bitcoin, and you make the Bitcoin slice the biggest slice, and you will outperform this more conservative mix of assets. Guys, look, for a 12-year-old baby, it's the 8th most valuable asset in the world. You can no longer ignore this. The US government owns over $3 billion worth of Bitcoin. Why? Why is the US government allowing now its banks to permission its banks to custody this asset, to hold it? Why? Why does the US government own Bitcoin? Why has it given all of its registered banks, right, the ability to custody the asset, to hold it, to hoard it? Why? Why do you think this is? Because it's rising up the ranks at the speed of light. And it's only a matter of time before it is now worth more than silver, which is number 6 in the world. And then it will be a matter of time before it takes out Apple, Microsoft, the Saudi Armac oil company in the Middle East, Apple, number 2 asset in the world, and it's going for gold. And I'm here to tell you that that is only a few years away. Let me give you my targets so that you have them. Now, I did a speech on this all the way back when Bitcoin was $10,000 here. I believe I did. Maybe it was somewhere else. But anyway, I have adjusted these targets. So I have an April target for Bitcoin at $65,000. We hit an all-time high today of 32,300 or so. I don't know if that's changed since I'm talking. I mean, it's 52,300 or so. So we are now at 52,200, $65,000 price by April 2021. My target for August, by August, $85,000 Bitcoin. By November, $108,000 Bitcoin. And these are conservative. That's right, conservative. You're not going to find gains as secure as this asset is going to deliver, not only over the next several years or several months. I'm talking the next several decades. And so all of my traders have been prepared for this. We have been doing this since Bitcoin was priced at 3,800, and it's still early. Every person who gets into this thinks they've gotten in late. They think they started late. They think they didn't get in enough. But I'm telling you, this is Apple in 1992. This is Amazon in 1994. This is Facebook when it had 5 friends. Now, take all of that and multiply it by like 10,000, and you get the dynamic idea. All right. Now, this is an algorithmic chart of Bitcoin, and a lot of people don't look at it like this, but you should. And where this mark is here, that blue mark at the bottom, we're at the 3rd halving. Halving. I always have trouble with that word. But as you can see, if we move to the top, if I can bring up very quickly here, if we move to the top, guys, of the channel, this puts us at a $100,000 Bitcoin price. All right. So we are like here now. We're still very early in this cycle. It doesn't look like that on a regular chart, but from an algorithmic perspective, we're early in this current cycle. And this is where I get my $108,000 price target, the upper portion of its algorithmic channel. Now, a lot of people say, well, Oliver, Bitcoin is so volatile, but every baby asset's volatile. Amazon fell from 85 to 5. That's not volatile. Look at Tesla. One of the most valuable assets in the world until Bitcoin took it out recently in terms of value. But look how volatile that stock's been. 300, now 100, 1,000, now 600. All baby assets are volatile. Your children were volatile when they were 6, 7, 8 years old. Didn't your children fall a little more frequently when they were young, but stop falling when they became adults? It's a baby. It's not going to fall the same way it fell last when it was a real young baby. It's going to fall less and less as it becomes mature. But you want to get into an asset when it's volatile. The volatility is the number one sign that it hasn't been adopted by the world yet. So you're early. And it's also the sign that the freaking thing is alive. Anything that's not volatile is freaking 90 plus years old already. It's dead and everyone's there. When everyone is in the asset, the volatility goes away. All right. This is the problem that gold has. If there was any year that gold should have been the star of the entire world, it was 2020. But what happened? Why? Why did gold only deliver 12% and Bitcoin delivered over 400%? Why? Why is that? Because there's a migration away from the analog version to the digital version, like it has happened 100% in the past with every other ecosystem, every other aspect. It is time for gold to be dematerialized and digitized, and Bitcoin is doing it every single day. Ignore this message at your peril, traders. Ignore it at your peril. I'm telling you, and I'm so glad that I finally got that epiphany. So all money declines in value. Since 1971, the US dollar has lost 94% of its value. Wow. Since 1971, becoming a fiat currency. The average lifespan of a fiat currency is 27 years. The only reason why the US dollar's lasted longer is because it's the world's reserve fiat currency. All right. All paper market stocks rise and decline, but eventually come back to parity. The only things that rise over time, over long periods of time, gold, silver, art, collectibles like sports cards and things like that, ammunition, firearms, agricultural property, beachfront property as well. Bitcoin is the new king of the block here. But I want you to look at this list in number 3. These things go up in value over time, practically forever. The problem that gold and silver have is that they're analog. You see, art is being digitized now. The blockchain is digitizing art, and it's the new frontier. It's the new future, because in the future, it's not going to be a Mona Lisa in the hands of one greedy individual. It's going to be thousands of people owning a little piece of the digital version of Mona Lisa. And those little pieces are going to go up in value. This is happening as we speak. Art is being dematerialized. Collectibles are being dematerialized. And yes, it is going to dematerialize war as well, because war is fought because of fiat currencies. Wealth occurs when your value rises faster than all of the other assets decline, because stocks decline over time. They do. Fiat declines over time. They do. There are more publicly traded companies now zero than there are above zero. It's just the way it is. So you've got my balance here. I'm looking for you to join me. For those of you who are looking to really grab this course of building wealth over time the proper way, in my opinion, I've been doing this for the last 34 years. All right. With all of my wealth traders, we do this together. We seek out the opportunities together. We enter those opportunities together. We play those opportunities together. And we've had a tremendous record over the last 15 years or so with this program. It's called my Trade for Wealth program, guys. It's a $4,000 cost, but for the next 48 hours, it's 50% off. $2,000. Look, that's one trade. That's one trade. This is a lifetime program. You will never have to put another single dollar into the program whatsoever. And we will walk down this wealth path forever. As long as I'm breathing, as long as I'm applying my capital, you watch me apply my capital, my real capital across all of my accounts in the things that we talk about, in the things that we discover. And we've discovered a great many things. But I'm here to tell you that the vast majority today of our direction, not all of it, but a big chunk of it, is now in this new digital direction. Join me, guys. Tomorrow I will be speaking at the same time, I believe, on a different topic. I'd love to have you with me. I want to thank you all for your time. I want to thank you for your interest in my talk. And I want to thank once again The Money Show for having me. Thank you very much.
Thank you, Oliver. Great presentation as always. There is a reason you're a fan favorite.
Thank you.
You have a great afternoon. We'll see you tomorrow.
Stop it on, guys. Boom.
Boom. We hope to see all of you tomorrow as well. Day 3 of the virtual investing expo. Thanks again, Oliver. Have a great afternoon, everybody.
Thank you.